Do you ever worry about the state of your credit? Have you ever missed loan or credit card repayments? Well, today we're going to share some tips on how to improve your credit score and get back on track. So, welcome to our video, What Does Adverse Credit Mean? Adverse credit occurs when you repeatedly fail to make repayments on your loans or your credit cards. It can also happen if you mismanage your bank accounts and accumulate charges over a long period of time. When you don't repay what you've agreed upon in your credit agreement, lenders report this to credit reference agencies like Experian or Equifax. Late payments and not repaying enough each time can result in points deducted from your credit score. Although there isn't a fixed score that defines adverse credit, anyone with a poor or very poor score is typically considered to have an adverse credit history. But what does adverse credit history actually mean? Well, it's just another way of describing adverse credit. It's when someone fails to meet their credit repayment terms by not paying lenders on time or not paying the right amount for an extended period. Adverse credit history can be caused by repeatedly defaulting on a single loan or credit card or by not meeting payments on multiple loans and cards with various lenders. Now, how long does adverse credit last? In the UK, adverse credit remains on your credit file for 6 years. After that period, the financial data related to late payments is deleted from your credit score. However, don't worry, because there are ways to improve your credit file in the meantime. By following certain steps, you may still be able to access credit from loans and credit card companies, even with previous adverse credit. So stay tuned for our tips on how to improve your credit score. Wondering if you have adverse credit? Well, there's a way to find out. You can check your credit report on a credit reporting agency's website, as lenders report defaults and negative balances to those agencies. You'll need to complete a credit check to get the information that you need. If you've failed to pay what you borrowed in full or on time, it's likely that you have bad credit. Missed payments will decrease your credit score by a certain number of points, depending on the nature of the missed payment. Repeatedly missing payments will further decrease your credit score, leaving you with an unsatisfactory credit rating. Now, you may be wondering, where can you find your credit report? There are multiple online credit reference agencies such as Equifax, TransUnion, Experian, and Call Credit that provide access to your credit report. These agencies often offer free trials where you can see your credit score and credit history for 30 days. Just remember to cancel your free trial before you're charged for the following month. So how can you fix your adverse credit? One way is to look for lender errors on your credit report. Sometimes there might be erroneous details that lower your credit data. You can contact your lender and ask them to request the removal of these errors. Another way to fix adverse credit is by improving your financial health. By being responsible with your money and repaying lenders as agreed, you can increase your credit score and reduce the risk of adverse credit. Here are 5 common ways to achieve this. Pay your bills on time and in full. Avoid unnecessary credit. Prioritize paying off high interest debt. Minimize moving homes too frequently, and use credit responsibly and in moderation. While these tasks may seem challenging, there are tools and resources available to assist you. Budget planning tools and debt solutions can provide valuable support. You can also seek help from money management businesses or finance charities for guidance and advice. But what if you want to remove adverse credit from your credit report? Well, aside from looking for errors and asking your lender to remove them, adverse credit will automatically be deleted from your report after 6 years. However, it's crucial to avoid accumulating more arrears during that time. Now, you may be wondering why having good credit is important. When you apply for credit or a mortgage in the future, lenders and mortgage companies review your credit history. If they find a history of debt, they are likely to reject your application. So remember, your current performance matters for years to come. Can you still get a mortgage with adverse credit? Well, it may be challenging to find a mainstream mortgage lender, like a bank, that's willing to lend you money to buy a home. Mortgages involve significant sums of money, and bad credit can affect your chances of securing that type of loan. However, there may be some mortgage lenders who consider individuals with a poor credit history. Keep in mind that the amount they lend may be limited and the interest rate could be higher than usual. Consulting with a mortgage advisor can help you navigate the market and find financial businesses that offer mortgages to those with adverse credit. Now, how can you avoid adverse credit in the first place? It often starts with failing to keep up with credit agreements. This can be due to personal circumstances changing suddenly, like unemployment or poor money management. Remember, it's not always your fault. There may have been instances where you were wrongfully given credit or charged an illegally high interest rate. However, you can take steps to avoid late payments. Communicate with your lenders, ask for breathing space or payment holidays when circumstances change. They may be willing to renegotiate agreements to help you avoid negative balances and prevent negative reporting. Lastly, it's essential to remember that arrears and past debts not only impact your credit report, but can also lead to enforcement action. If you fail to repay, you could face court proceedings, county court judgments, CCJs, or even repossession action. If you're struggling with debt, then there are a number of debt solution options available here in the UK. Some are free to use and others include fees, and each will have their own pros and cons. If you want to learn more about the solutions available, then we've created a really great form that you might be interested in checking out. Click the link in the description to get started and answer a few multiple choice questions like the total amount of your debt, how many people you owe, your living situation, and we'll connect you with one of our trusted partners so that you can find out more and take steps towards improving your financial situation.